Oh, aloha, everyone. Joshua Hayes at BigWaveTrading.com. And for this weekend, we're actually going to skip the overall market analysis and skip reviewing our top current holdings so we can keep this video lesson shorter. I want to remind everybody that the long-term trend of this market since the March lows is up. Everything about this market is bullish. There is no reason whatsoever to be bearish on, especially the Dow Jones Industrial Average, in the intermediate to long term. Short term, however, I am seeing negative divergences on multiple indicators on the daily 195, 130 minute time frames. I use the daily 195, 130 and hourly time frames. I'm starting to see some negative divergence on that index, the SPY, the DIA, or excuse me, the SPY, the QQQ, the IWM. It's all showing these kind of negative divergences. The QQQ, though, has got a longer term bearish setup with negative divergences playing out. The key for me will be to see if we can hold on to this support low. But as long as we're in between this high and this low, on the shortest term, doesn't make a whole lot of sense to be either bullish or bearish. SPY, as long as we're below this high and above this low, we're range bound. The DIA in the most shortest of short term, I think everything's just good to go here. Little worried about this most recent push with the volume declining and those negative divergences showing up. But until that changes, there's really nothing to be too concerned about there. IWM, same thing. We're in between these highs and these lows. Trend is up, so I'm overall bullish, intermediate to long term, but short term, we're not out of the woods just yet. I still see way too much bullish sentiment short term. But we just keep rotating from hot sector to hot sector with the non-fungible tokens, the newest stocks in play each day for me, as we've seen TKAT, OCG, and ZKIN be the day trade names lately, with HOFV also on Friday. So as long as we keep finding hot areas of this market, we still get these stimulus checks coming to us. People start getting their tax refunds. I assume it's going to find its way into the market. So as long as that's the case, even on down days, I'm looking to find stocks to buy that give me signals. This weekend, due to quadruple witching, there were a ton of new signals. And in fact, I had more stocks show up in my extreme volume surge scan on an end-of-day basis than I ever have following any quad witching session before. But out of this massive list of new signals that I'm going to set orders up on, there are two stocks that I want to go ahead and give out to everyone. Doesn't mean they will work. Doesn't mean that they're going to produce any gains. Doesn't mean they're even going to trigger and fill. The whole point of this is I trade like a robot on an end-of-day basis. I day trade intraday time frames with stocks that are in my float, short float, institutional ownership, average daily volume, average dollar volume, news catalyst, hot sector, momentum area. That's the area that I focus on intraday. So I have that time frame intraday. Then I have my swing trading time frame end of day, which is my sweet spot, especially living on Maui. This is the methodology that works best for me. However, since the top in 2018, my monthly TSV and VIX has not lined up properly to really get super aggressive on the swing side on my end. And not only that, my beautiful end-of-day charts that I know when I see, I can really get aggressive and put a ton of my account capital into a signal. They're just not showing up, and they haven't been. It's been too volatile of a tape. To combat that, so you don't have to just day trade, I also have quarterly portfolios. 10 stocks, 10% of my capital in each. I hold them for 90 days. On top of that, I have long-term positions that I buy and hold for years when they pull back to what I consider value areas. And on top of that, I have an IRA where I put the same dollar cost averaging amount into it every month. You could do quarter, you could do weekly. And then I just simply put that into the SPY, QQQ, IWM. Rinse and repeat. Doing that over a span of 20 to 25 years, you're going to retire very rich. So there's various ways to attack this market. I use all time frames, but the easiest one to manage for me is the end of day side. It's also the easiest one to teach because intraday, I don't know why everybody gravitates towards that time frame. Is it the most lucrative with the least overnight risk? Yes. But it's also one of the most quote, quote, stressful, highly emotional, and tough time frames for new traders to master because they don't know where to look. They don't know where to focus. And look at that pretty shiny rock. Look at that shiny object. Look at that star over there. And you can kind of go all over. With my end of day stuff, guys, at bigwavetrading.com, there isn't a better service for the cost that you will find anywhere over there. What I charge on an annual basis for everything is 50% less expensive than the nearest competitor. And I watch these and I try to see what they're doing, and they don't offer you nearly what I offer my members. One of the biggest advantages of this time frame, especially if you take my trade ideas, is that I give the trades to you with the exact buy and sell parameters before I take these trades on my end. Once I give them to everybody, I then go in and I work with the Interactive Brokers account for this end-of-day methodology, and then I set up my orders exactly as I give them to you and tell you exactly how much of my capital I'm putting into each one. So with that little overview out of the way, I have 2 new long signals I want to give to everyone this weekend. Will they work? I don't know. I don't care. If they work, great. I will trim profits along the way and trail, raising sell stops on the way up, which hopefully will become profit stops. And by the time the stock stops uptrending, I'll be leaving with the profit. I don't care how much of that profit I get, as long as I get some of it, hopefully the majority of it. But it's always up to the stock. If the stock triggers and fails, no harm, no foul. I'm risking the same amount of capital per each position using a max loss risk per trade. What that means is, whatever that dollar amount is that I'm comfortable with initially losing on the trade to know that I'm wrong on the trade, that's what I put into a stock. And currently on an end-of-day basis, I'm trading as small as I can possibly trade, which is a 1R risk per trade. What that means is from my good to cancel buy stop level to my good to cancel sell stop level, the most I'm willing to risk is 1% of my total account capital in my end-of-day account. If that total 1% is hit, so be it. But the goal is to almost never lose that full 1%, because if it triggers and fills on Monday, whatever Monday's low a day is will be where half of my stops go. Friday's low a day will be the final stop on these 2 positions. So with that out of the way, what are they? Let's go look at it. One of my new long positions on Monday will be VECO. What I have here on VECO is a bullish hammer candle off the uptrending 50-day moving average, which lines up with this previous support level, which lines up with this previous resistance level right here. If you draw a line straight across, you'll see what I'm talking about right there. Previous resistance should now become support. Will it? I don't know. I can't predict the future, but that's what I'm doing right there with VECO. So I got a hammer candle off that 50, strong price support, which used to be resistance. I have heavier above average volume on the signal and a surge in my balance of power indicator to the green level. My game plan with VECO is to get long with a good to cancel buy stop order at 21.29. I'll be adding 21 cents to that order for a limit offset. If it trades up and through 21.29 too fast, I might not get filled. But I always give myself a porosity of about 1% to try to get filled. And if it screams past that level, I don't have FOMO. I don't chase. I don't have that in my blood anymore. I've been doing this too long. It doesn't exist. So be it. If VECO doesn't trigger and it goes to 100 without me, whatever. On to the next one. But if it does trigger at that 21.29 stop, my risk is Friday's low day, 20.68. Now, that's a very tight parameter, so I can get bigger size for that 1R risk in VECO. The reason why VECO is a new long position is twofold. First off, VECO has an elevated short float. It has an 8.6% short float. So if VECO decides to start moving, it can really start moving. On top of that, VECO is in a strong industry group that has a high group relative strength rating at Market Smith Investors Business Daily. It has an 87 group relative strength rating. That doesn't mean it's going to work, but I've now put the short interest on my side, a hot industry group. We're near the old highs. We're at clear support. If VECO works, awesome. If it triggers and fails, whatever. Once it hits 20.68, I'm out. Don't care. Whatever. Moving on to the next one. VECO, I like it. Don't love it. Not going to marry to it. If it fails, we'll wait for the next setup. If there is the next setup. The final new long position that I'm that I am taking on Monday, WK. WK has a very, very similar setup to VECO, except for on this one, we're just really looking at the old support levels. You can see here that it's near a support level here, a support level here, and these support levels here. So it's almost like a quadruple bottom, even though there is no such thing. So that's why WK is on my radar. Hammer candle off that strong support level on heavier above average volume, and just like VECO, a little surge in my balance of power indicator to the green level. With WK, I want to get long 94.39, adding 94 cents on that for my limit. So my good to cancel buy stop order is 94.39. My limit, my good to cancel buy stop limit is an extra 1% on top of that. Where is my cut loss level if I'm wrong on WK? Right there. Friday's low a day, 90.72. If it triggers and fills and works, great. I'll be taking profits as it extends and trailing up my buy stops as it moves higher. If it fails, I'll lose 1R. Now, let's say that WK opens at 93.63 on Monday, triggers and fills and extends higher. Let's say 93.63 is the low a day. 50% of my stops will be at 93.62 with my final stop at 90.72. Once the stock is moving in the proper direction that I want it to move, I will now no longer let it lose that full 1R risk, initial risk. I start to trail those buy stops up. So let's say I buy 1,000 shares of this on Monday. 500 would be at 90.72. 500 would go at 93.62 if it's the low a day. Same thing with VECO. Let's say 21.18 is the low, 21.19 is the low a day. 21.18 is where half my stop would be, with the final stop at 20.68. WK, like VECO, has an elevated short float at 9.6%. So I like that. There's shorts that are in this stock, so if it gets going, it could really get going. And even better, for me, it's part of a strong industry group with a group relative strength rating of 90. Awesome. We'll see if it works. If WK never triggers, let's say that it never gets above 94.39 on Monday or Tuesday or Wednesday and Thursday and fails this low on heavier volume, then there's nothing to do. The trade won't ever execute and the trade is canceled. If VECO never trades above 21.29 during the week and fails these lows on heavier volume, especially if it loses that green bop, that's it. Trade's canceled. No loss taken. No trade taken. It must trade up through strength. Now, if the stocks gap up, I am willing to let them fill on a pullback to those buy stop limit levels. However, it's only because I'm risking 1R. When I start increasing size in these positions, I want to see it go through those levels on strength not pull back to those levels on weakness. So those are your two trades, WK and VECO. Trade like a robot, trade without emotions. That whole Wall Street bets Reddit crowd, you guys probably have a lifespan of 18 months as a professional trader, trading the way you guys do. I go and I check out the Discord channel. If any of you guys that are part of that crew are watching this video, you have no chance of surviving in this market long term. I suggest you learn how to trade like a robot, get a real education, come join the family at Big Wave Trading. It's very inexpensive. The money you're going to lose whenever the market actually pulls back, we're not, and that money could be put to better use learning what you'll learn from Big Wave Trading. All right, everybody, wrap it up there. Thumbs up. If you like the content, leave a comment. Any questions, suggestions, leave them below. Hit that bell, subscribe button. Thank you very much.